Hi, it's Nero here from Investment Rise, and if you're watching this video, I'm guessing you want to know where's the best place to invest for maximum capital growth over the coming few years. Well, I'm about to give you that answer, but here's a clue. It's not just one area. There are multiple areas you can invest in for capital growth going forwards, but they all, without exception, meet this one criteria. And I'm about to give that to you, and I can promise you that when I give it to you, it's going to sound so basic, so fundamental, almost even boring. You're going to be like, God, is that it? But here's what I can tell you. When I bought my first investment property all the way back in 2002, I was stunned to see 18 months later, the property doubled in value. And I became obsessed. I was like, well, that's great, but what if I just got lucky? What if there is a way for me to then replicate this success? What are the key criteria that I need to know in order to be able to find areas with maximum chance of capital growth going forwards? And over the next several years, I became obsessed. As I said, I studied everything. And when I found out what the answer was to that question, I was almost disappointed because it sounded so basic. So don't be surprised if that's your first reaction, but stay with me because I'm going to show you exactly how you find these kinds of areas. Okay, so as simple as it is, don't discount how important it is. And it's this. If you want to buy in areas that have the maximum potential for capital growth, only, and I mean only, no exceptions, only invest in areas where there is greater demand than supply. Now, I told you, it may sound basic, it may sound boring, but the question you're probably wondering is, well, that sounds great, but how do you do that? How do you find an area where demand is greater than supply? Because anyone with an economics degree will tell you that is true. If you can find an area, and that applies to almost anything in economics, where demand is greater than supply, then all other things being equal, prices will rise. But when it comes to property, the question is, how do you find these areas? Well, there are 5 things that you need to look for in order to give yourself the best chance of finding areas where demand is greater than supply. And let's get into them. Number 1, look at the time on market. Look at how long properties in the suburb or suburbs that you're targeting are taking to sell. And then ask yourself, is the time on market, is it reducing or is it increasing? So if you identify a particular suburb and you're tracking properties, say over a 3-month period, well, at the beginning of that 3-month period, how long does it take for the type of property you're targeting to sell? How long does it take to sell? And then 3 months later, how long does it take to sell then? And does the time on market, the time to sell, is that reducing or is it increasing? Because if the time on market is reducing, then you can be fairly certain that demand is increasing over supply. That's number 1. Number 2, you want to look at the population increase, and especially the projected population increase. Now, this is going to take a bit of digging. You may need to subscribe to certain reports or get the help of professionals. But recently, we were helping a client who wanted to buy a property, and they wanted to start off small. They wanted to stay to a budget of under $450,000. Okay, and they wanted the rent to pay the mortgage, which it did, but we'll cover that a bit later. But they were really looking at, well, how can they have confidence that they're buying in an area where demand is greater than supply? Now, this particular property was in Queensland, and so we went and looked at the Queensland government's Department of Infrastructure and Planning's reports. And according to those reports, in this particular area that we were targeting, from when our client was looking to buy for the next 25 years, the Queensland Government Department of Infrastructure and Planning said that they needed an extra 105,600 dwellings in that area over the next 25 years. But what does that translate to? It translated to 352 new homes each month, every month for the next 25 years. And they were building nowhere near that amount of properties, right? And that was before the COVID situation started. So that equation has even gone more in favor of being more demand than supply. Right? So if you can do that level of research and you can see that, well, they need this number of properties because that's what they expect the population increase, but they're only building this number of properties, well then demand is greater than supply. And you've got another indicator. Okay? So study demographics, study population movements, study what the government and government planning is saying they will need in terms of number of dwellings required versus what they're putting onto the market. Okay, so if you can already find a market in just those two criteria where time on market is reducing, then you see data which says that the supply is coming nowhere near meeting the demand, well, you've almost just done it just there, right? But the thing is though, when you're buying in areas, right, demand can be greater than supply today. But what you're really looking for, and this is a key distinction that I'm about to share with you, it was this distinction that helped me, for example, predict that the Sydney boom that we had last, which and it was going to end in 2016, 2017. At the time, the prices were rising, and people were like, well, how can you come out and decide and predict rather that the boom is going to end when prices are rising, when demand seems to be greater than supply? How can you predict that? And a lot of criticism online, but my predictions came true with especially Sydney market and Melbourne shortly afterwards experiencing their biggest decline on record, right? And it was this. Look at government and the Reserve Bank of Australia, look at their policy when it comes to lending, when it comes to the economy, when it comes to industries that could affect the particular market you're looking at. Right? And one of the key factors that was very prevalent at the time when I made those predictions was that the government or APRA on their behalf were telling banks to tighten their lending constraints, making it harder for people to borrow, making it harder for people to be able to afford properties at the prices they were at, which meant they effectively made artificially turned off demand or reduced demand, which hence brought prices down. Okay, so you want to start looking at these key things. Okay, for example, in 2011, when I made my biggest investments into the Sydney market, at that time, the Sydney market had been flat for years, and people were like, what are you doing? Why are you investing in Sydney? Market prices haven't risen for so many years. It's overpriced. Prices are going to fall. Yet you and I both know what Sydney and then Melbourne did as well. And what was it that I was really following at the time? Well, I was looking at, again, what lending constraints were like, and they were being eased, plus also I was tracking interest rate movements as well. Okay, so you need to really look at these kind of factors, right? Because that's going to give you the ongoing demand. Because what you don't want to do, and I'm seeing a lot of people make this mistake right now, is they're buying in maybe a small country town where there is a bit of a blip in demand versus supply. But the question you have to ask yourself is that going to be ongoing or not? Right? And so that's the third criteria we look at is government policy. But then the fourth criteria we look at, which also helps impact on or give you more certainty around ongoing demand, so your future potential for capital growth and over the long term, is rental vacancy and rental returns. You see, one thing I can tell you is that rents and capital growth are almost in the inverse of each other. So if you look at a market where rents are dropping, you can almost be guaranteed that prices are going to fall afterwards. Right? We've seen that recently in the apartment market, especially in inner city Sydney, Melbourne and Brisbane, as a result of the COVID pandemic. Rents dropped first and then prices followed. And prices will not rise in the inner city unit market until we start seeing the rental vacancy decrease, until we start seeing rents increase. And only once rents increase will then capital growth and prices rise and prices follow. Okay, so you want to start looking at what the rental returns looking at. I mean, I remember going back even further when I was helping people invest in property. Now, this is going back about 10 years ago now. A lot of people are buying in mining areas. And they say, look, Nero, I'm buying this property. It's a cash cow. It's priced at 500 and one particular person, he said, I'm buying it for $587,000, but my rent is $800 a week. It's going to be cash flow positive. I'm going to do great. And he's right, it was. But my problem was the rent on that property 6 months earlier, or property similar to that, had been going for $1,000 a week. So rents had dropped 20%. Now, he didn't care. Unfortunately, he just looked at the positive cash flow, looked at the short-term benefit, and went for it. But I was like, if rents are dropping, even if it's positive cash flow today, you've got to ask yourself, well, what's going to happen to prices? And unfortunately, a few years later, that $580,000 property ended up only being worth about $300,000. And his rent had dropped from $800 a week down to about $395 a week. Okay, so you need to look at the trends. Don't just look at something as a snapshot in time. Really, you want to look at, well, what's actually happening to rental values, rental vacancies as well. From a rental perspective, you also want to look at, they said, the rental vacancy, because the tighter the vacancy, number one, it's going to be easier for you to get your property rented, but it also indicates more demand. You are never going to get capital growth in an area where there is a high rental vacancy. It's just not going to happen, right? Because why would investors want to buy there? And owner-occupiers are going to try and get a discount from existing investors who bought there, who want to offload their property to try and get away. Okay, so that's the fourth factor you want to consider. And then the fifth factor is, once you've done all that research and you've targeted a particular suburb, is go and actually check out how many people are turning up to open homes. How many people are turning up to auctions, okay? And actually do some on-the-ground research, or whoever's on your team who's helping you find these properties, ensure they're doing that on-the-ground research, okay? So for recently, in fact, just last weekend, I went and looked at a property in the North Shore of Sydney, and I wanted to see what the demand was, right? Now, property was a beautiful property located in a quiet cul-de-sac. But as I was driving up, I couldn't believe the traffic. I was like, oh, this doesn't look so good. There's so much traffic here. That may not be good, especially if I want, a young family to rent this property out. But I persevered, and I'm glad I did, because you know what the source of the traffic was? It was a number of cars turning up for the open home. They couldn't all park in the cul-de-sac. And mind you, I was 20 minutes early to the open home, and even then, cars couldn't park in the cul-de-sac. They were doing U-turns. They were trying to, park almost illegally. Some people were going to park their car up on the curb, on the main road, and then running back to make sure they were first in line. It was nuts. And that shows that there's massive demand for that particular type of property and similar properties. Okay. In fact, I remember even having just watching the agent as he was preparing for the auction, and it was the open home rather, and he had this big grin on his face. He was like a kid in a candy store, because he could see the number of people who were potentially interested in this kind of property. Okay, now of course some of them are just lookers, not all of them are interested buyers, but it does show just how much interest is in that particular property, in that particular area. Okay, so you need to be doing your research at that level, whether you're buying locally, whether you're buying interstate, as I know a lot of people are doing right now, and makes a lot of sense if the numbers work out for you. But you've got to make sure you can track these 5 factors. Number one, selling time on market. Is time on market decreasing? That indicates more demand than supply. Is it increasing? Then that means you're going the other way. You've got less demand than supply. Number 2, do your research, or get the facts and figures. You may have to, as I said, dig around and pay for it to work out what the projected population increase is going to be, because again, that indicates more ongoing demand. And as a result of that population increase in demand, how many properties are required, and are they building anywhere near that number or not? In fact, there are many areas right now where they are not building enough. And so that's a good indicator of demand being greater than supply. Then number 3, look at the government policy, the Reserve Bank of Australia policy, that's relevant to the particular area you might be looking at, the various industries that may affect that particular area that you're looking at. You need to ensure that there's nothing happening on the horizon that could have an adverse impact on the area you're targeting, but at the same time it could be a positive impact, which may only then increase your motivation to buy in a particular area. Okay. Then number 4, you want to look at the rental returns. The rents, are they increasing or decreasing? Are vacancy factors decreasing or increasing? Again, all these factors will help you with demand versus supply. And then 5th and finally, look at the number of people who are turning up to open homes and auctions. All right? Because if you can find an area where you're happy with all those 5 criteria, you have done everything possible. You have stacked the odds in your favor as much as you possibly can in order to get yourself capital growth going forwards. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.